and if any special meaning is to be assigned to a particular part of the agreement, then you shall give weight to that part also. And Article 32 says that you may also use the preparatory work of the treaty to interpret a treaty. Recourse may also be had in order to confirm the meaning of the words resulting from the application of Article 31, if there is still ambiguity or leads to a result which is manifestly absurd or unreasonable. Article 33 is not that critical for us. It is in relation to where treaties are stated in two separate languages. Especially in Europe, you find that some are in French and some are in German, for example. Two contracting states may want the treaties to be in two different languages. Then both languages are equally applicable unless the treaty itself says that a third treaty language version is also equally applicable. And both the treaties are supposed to have, presumed to have the same meaning as the authentic text. And where a particular text will prevail or not will depend upon what is the intention of the parties. Other aids to interpretation may be the OECD and the UN Model Convention, but remember, OECD is residence-based taxation, protocols, technical memorandum, parallel treaties, international case laws, and preparatory work. This is how you normally interpret a treaty. The concept of beneficial ownership is there also in the treaties, and you will find it mainly in article on interest, article on royalties, and article on dividend. It is also found in certain provisions of our Indian tax laws. And what is the distinctive proposition between legal ownership and beneficial ownership is one who enjoys the right to receive income from the property or the right to transfer the property is the distinction between legal owner and a beneficial owner. According to Clause Waddell, the erstwhile author, a beneficial owner is he who is free to decide whether or not the capital or other assets should be used or made available for use by others, or two, on how the yields therefrom should be used, or both. So that means person who controls the substance of the asset is more important than the legal form of the asset. Now we come to interpretation of transfer pricing only in relation to the treaty. Section 92 states that income arising to associated enterprises from international transactions or specified domestic transactions shall be computed having regard to arm's length price. So, the three limbs are income arising, to whom associated enterprises, from what international transactions or specified domestic transactions shall be computed having regard to arm's length price. To a great extent, the OECD transfer pricing guidelines for multinational enterprises and tax administration is borrowed by domestic legislation across the globe. So the preconditions, as I already stated, are two or more A's enter into international transaction or SDT, and consequences is that both income and expenditure is to be computed having regard to AL, that is arm's length price. So I have just brought up a particular nuance to interpretation. So section 92A defines what are A's. Means an associated enterprise means direct or indirect participation in management, control, or capital. By whom? By one enterprise in the other. That is direct holding. By the same person in both the enterprises. That is indirect holding. A holding in B is direct. A holding in B and C can also make B and C associated enterprises, and that is indirect holding. So how does this holding in capital, control or management come about? It could come about through equity holding, control of the board of directors, that is de facto control, appointment of one or more executive directors, that means you have de facto control over the organization. Mutual interest will also constitute a relationships. And one of the limitations in our law is that for there to be international transfer pricing or international transaction, one of the A's has to be a non-resident. (92A2) states that for the purposes of subsection 1, which we already saw, they have defined a series of relationships which can result in associated entity relationships. And what are they? Holding of 26% or more of voting power. 26% does not de facto give you control. If you were to read control in subsection 1, it would be more than 51%. But here it is 26%, because control in capital cannot come about with a minority shareholding. But 92A2 deems that this relationship of even 26% gives you enough clout to have operational control over the enterprise over in which you have 26% holding directly or indirectly. Dependence on intangible assets, because this is known as operational control. That means the law defines that even if you are completely dependent upon the other enterprise for a particular IP, know-how, franchisee, then also there is an A relationship. Similarly, there can be operational control which is manifest by influence on price and conditions of supply by the buyer. Control by an individual or is relative. And financial transactions, where if a loan is given, where 51% or more of the book value of the total assets of the borrowing company, then the lender also has control over the other entity. And guarantee of 10% or more of the total borrowings also results in a relationship. So now, what is the purpose of this? Is to try and contradistinguish between the definition of an associated enterprise under a treaty and under the domestic law. So Article 9.1 of the OECD, and which is a replica also in the UN model, defines an associated entity relationship like this, where direct or indirect participation in management control of capital by one enterprise into another enterprise, or by the same person in both the enterprises. So I am only on the first part. When you read this, this is akin to 92A1. Then it goes on to say, this is the transfer pricing part, any profits which would accrue to either one of the enterprises but have not accrued due to the special control conditions will be included in profits of that enterprise and taxed accordingly because of the relationships. So the likely purpose of Article 9.1 is that it restricts domestic law only to the extent of application of the arm's length standard. So this is the key. Can this definition, which is given in Article 9.1, have any relevance to the definition of associated enterprises under Section 92A1 and 2, which is much broader than 9.1. So this is the way probably law will evolve in jurisprudence of how to interpret the relationship of A's vis-a-vis the relationship as stated in the treaty. And now we come to specified domestic transaction, which has been legislated from assessment year 13-14. SDT is defined to mean any expenditure in relation to persons specified in 48(2)(b). So for all expenditure incurred in relation to persons specified in 48(2)(b) or transfer of goods or services between the same units of a same entity or between two companies which are closely controlled, where Chapter 6A or ATI is effective, or any such transaction will also be covered within STT. This is the section 92 to no specified domestic transaction. To be exact, I'm sorry. Now we come to the last part. Just wanted to give you an interpretation. So how will you interpret 92.1? And I think I just want to touch upon Vodafone. We don't have the time to get into much detail, but I'll try and make you understand. The transaction in Vodafone's services was that the Indian entity issued shares to its holding company, which was outside India, at a particular price X. The transfer pricing officer believed that the price X which was charged, that means the premium that was charged, was less. And therefore the difference in premium was considered to be chargeable to tax by the AO. And therefore there was a writ petition filed. In the writ petition, the High Court, Bombay High Court, gave it back to the DRP. DRP stated that this addition to income is correct of the difference in the value of shares. And the Bombay High Court was then again a writ petition was filed because the Bombay High Court had allowed Vodafone to come back to the High Court if the order passed by the DRP was patently illegal. And the Bombay High Court came to this conclusion. And what was the first word in section 92? I read any income arising from an international transaction or specified domestic transaction. So the word is income. So the word income, as our friend said, is as per section 224. So therefore, if that income is not comprised in 224 read with the other charging sections, Bombay High Court said that can this transaction be tested under section 92. So they said that capital gains is specifically chargeable to tax on the basis of which it is drafted in or legislated in section 45. But the amounts received on issue of share capital does not have the color of income or the color of capital gains. And due to absent express legislation, no amount received, accrued or arising on capital account transaction can be subjected to tax as income. This is critical. To bring a transaction within the four corners of transfer pricing, it has to be income which arises from the transaction, because section 92 is not a charging section but a computation section. It's a machinery section. Chapter 10 of the Act is a machinery provision to arrive at the arm's length price of a transaction. Is not a charging section. The charge to tax under the Indian income tax is given by section 4, read with scope, 5, read with heads of income. Section 14, which says which are the heads of income: salaries, income from house property, profits and gains of business or profession, capital gains and income from other sources. Therefore, any income which arises from an international transaction between A's must satisfy the test of income and find its home in one of the above heads, that is the charging provisions as per chapter 10. Then only, because chapter 10 is only a machinery provision to compute the chargeable income to arm's length price. Machinery section cannot be read dehorse the charging section. And the High Court concluded that the issue of shares at a premium by the assessee to its non-resident holding company does not give rise to any income from an admitted international transaction, and thus there was no occasion to apply chapter 10, and therefore it squashed the orders of the revenue authorities, that is AO, TPO and DRP, and set them aside as being without jurisdiction, null and void. Thank you, friends. I hope you have
friends, the topic of DTAAs and transfer pricing is such a vast topic. We did requires a lot of time, even a full day seminar will not be sufficient to deal with the whole topic. But we are really thankful to Shri S.P. Patel to explain this entire gamut in this very crisp and very effective manner. With this, I would request our committee member Shri Devendra Bhai to please offer a very well deserved vote of thanks to Shri S.P. Patel.
President Paresh Bhai, Paresh Bhai Shari, Chairman Directors Committee Ketan Bhai, Hitesh Bhai, Rahul, and dear fellow participants. You all will agree with me that history in a lucid and simple style refers to the various aspects of interpretation of tax treaties, article by article. So we are thankful to you for sparing your valuable time and enlightening us on the subject. I, on my behalf and on behalf of all present here, propose a very well deserved vote of thanks.
Tomorrow morning we will start our session at 9:30 sharp. And tomorrow we have a few interpretation subjects like basic fundamentals. Again, there are some fundamental topics like rules governing, doctrine of res judicata, doctrine of estoppel, and doctrine of binding precedent. Also, we will have one session on operation, expiry, and repeal of statutes. What is the effect of that? Thereafter, we will also deal with some fundamental concepts like ownership, possession, and transfer under general law as well as the income tax law. That will be the session for tomorrow. We will be meeting sharp at 9:30 and we will start our session at 9:30. Thank you very much. Excuse me, all of you. Tomorrow's all the entire session for tomorrow from 9:30 to 1:30 will be on the 4th floor, not here, on the 4th floor of this same building. At Valchandra. Thank you.
SP.